Morning, everyone. Welcome to our Phillip Securities Research Morning Call. For today, in terms of stock count updates, we have an initiation of Frencken, Phillip on the ground for NTTDC REIT, site visit note for Frasers Property. For technical analysis, we have for the S&P 500 as well as a summary of the trades initiated last week. And as for macro and sector outlook, we have our June update for the MAG-7 and also our Singapore Weekly. So this is our usual disclaimer. The information provided is solely for educational purposes and should not be considered as financial advice. Yep. So with that, I'll hand over time to Iqbal to get us started on Frencken. Thanks.
Thanks, Sid. I'll be presenting the initiation of Frencken. Title is Growing with a Giant. I'll explain more in the next slide. So for Frencken, for those who are unsure, they are a Singapore-based technology solutions provider, and they are listed on the SGX main board 20 years ago. Yes, and they operate across many facilities, 18 facilities across Asia, Europe, and the US, as you can see in the world map below. Their largest revenue contribution comes from Netherlands. This is their key customer is ASML. So that's where we get our title from, Growing with a Giant. Because with ASML's organic growth, we do think that Frencken will benefit as well. I'll talk more about how Frencken will benefit from it in the next few slides. Yeah, next slide, please. Just a little background on Frencken's revenue segments. In their semiconductor segment, they sell wafer fab equipment. For example, lithography equipment, they sell it to ASML. For deposition etch equipment, they sell it to Applied Material, which is also their key customer as well. So their semiconductor segment makes up about 46% of their revenue, as can be seen in the top right-hand corner. And for the latest quarter itself, the revenue increased 29% year on year. And this is being driven by steady sales to ASML, as well as ASML's production shift into Asia because of Frencken's broad manufacturing facilities across the Asian countries, for example, Singapore, Malaysia, and China. For medical segment itself, and analytical life sciences segment itself, they remain quite stable. As you can see in the bottom right-hand corner, they are the red line and the orange line itself. They remain at 1% and 2% growth. And they also make up quite a big segment of Frencken's revenue at 23% and 15% respectively. As for their industrial automation segment, they sell motors and switch gears, and this comprises quite a small portion of their revenue, which is about 4%. And the revenue has declined 46% year on year because of slower orders from a key customer in data storage solutions. So we don't think this is a very material impact on Frencken itself, because industrial automation only makes up 4% of their revenue. As for their automotive segment, they sell filters and plastic decorative parts, for example, those on the dashboard, to their customers. And the revenue also declined about 13% year on year. And this is in line with the broad decline in demand for EVs in Europe itself. Next slide, please. As for their balance sheet and cash flow, their NAV per share is at $1.03. So currently, Frencken is trading at a slight premium to the NAV. But this is still at a discount compared to their peers. Later I'll explain more. As for their net cash itself, they are trading they have a positive net cash, and it increased 43% year on year in FY24 itself. For their free cash flow, it increased 52% year on year in FY24. Their gearing ratio declined from 28% in FY22 to 20% in FY24. And their current ratio is at the highest level in 5 years, as can be seen in the red line in the bottom right-hand corner. And we do believe this is because Frencken is building up liquidity in order to fund their upcoming 63 million Singapore manufacturing facility. And this facility is expected to be completed in first quarter 2027. And this new facility has higher floor-to-ceiling heights as well as more clean rooms. And this added capability, we do believe that it will provide Frencken with more capabilities to take on more products and processes from their key customers itself. Yeah, and this positions Frencken in a much more better position in order to grow with their key customers. Yeah, next slide, please. As for industry-wise, Frenken's revenue closely correlates with the equipment players. Lum Research is not their customer, but I just included it to show the industry trend. And the equipment makers have provided revenue guidance of an average 18% increase for the next quarter itself. And this is because TSMC reiterated their capex budget for next quarter itself. And we do think that this is very positive for Frencken because, as you can see in the chart in the top right-hand corner, there's a very strong correlation between the equipment players' revenue, which is indicated by the dark blue line, as compared to Frenken's revenue, which is indicated by the red line. And moving on to the EVs, the industry trend for EVs itself, there is a slowdown in demand for EVs in UK and Germany because UK pushed back a ban on new petrol and diesel cars, and Germany ended their EV subsidy program because of budget cuts. Yeah, so this general decline in EVs in Europe itself has led to a slowdown in automotive segment. However, we don't think it is very material at this point in time because automotive still makes up only 8% of Frenken's revenue. Yeah, next slide, please. Yeah, so all in all, for valuations wise, for valuations and investment thesis wise, as you can see on the right, we believe that Frencken is a key supplier for crucial components in the most advanced machine used to produce 2 nanometer chips by ASML. And we do think that Frenken's finance swap products is expanding into components for deposition, etch, and strip processes for applied material itself. Yeah, so this broadening of portfolio into more segments of the entire manufacturing chain, we do think that this positions Frencken in a ideal position in order to grow as the entire semiconductor industry grows. And as you can see in the table on the left itself, if we look at the PE year plus one column itself, Frencken is trading at a 35% discount at a PE of about 13 compared to its peers average of about 20. Yeah, so we do think that Frencken is currently undervalued. And if you look at the column of price to book ratio itself, PEB itself, Frencken is also trading at 1.2 compared to their peers average of 1.5 itself. Yeah, so all in all, we initiate coverage on Frencken with a buy call, and our target price is 1.76, and our target price is based on 18 times FY25 PE, which is more in line with their peers' valuations. Yeah, next slide, please. That's all for Frenken's initiation. I'll touch on MAG-7 monthly now. Do take note that in this presentation itself, Glenn and Helena could not make it, and Glenn covers Tesla while Helena covers Apple and Amazon. So my colleagues, Fahmi and Serena, will cover for them in this presentation. Yeah, next slide, please. This is a summary of MAG-7's monthly performance for June. So MAG-7 performed better than S&P 500 and Nasdaq itself. And among the MAG-7 itself, NVIDIA is the best performance at 17% gains in June. Whereas Tesla is the laggard within the MAG-7 itself. NVIDIA outperformed the rest of the MAG-7 because they announced the further investments in Europe itself, which I'll touch on later. Whereas Tesla is lagging behind because there is a public feud between Elon Musk and Trump, and also because their vehicle deliveries in second quarter of this year hasn't been good. So this has affected their fundamentals, and people's sentiments for Tesla has changed, has worsened. Yeah, so overall for MAG-7 itself, even though there is a rebound, it is only up slightly for the entire year. As you can see, the year to date is only up 2% because the majority of the recovery only came in the second quarter of this year itself. And this recovery came after the initial crash from the Trump Liberation Day, because the investor sentiments were being boosted by moderate recession risks as tensions between US and China ease. Yeah, so this benefited the big techs itself, the MAG-7, because they have international exposure. So when the tensions between US and China ease, then the sentiments for them has changed as well, changed for the better as well. Yeah, next slide, please. Yeah, so I'll now cover NVIDIA. They have Many European countries have announced greater investments in AI factories. So this is a great thing for NVIDIA. For example, UK has announced 1 billion in funding to scale up the computing power. Mistral, which is also equivalent to OpenAI of France itself, they have announced partnership with NVIDIA to use 18,000 of their GPU chips to build an AI data center. So if you convert this into actual GPU revenue, this will be about 700 million US dollars, which will benefit NVIDIA. And last but not least, the European Commission also allocated 20 billion euros back in March in EU funding to construct 4 AI gigafactories. Yeah, so these 4 AI gigafactories will be definitely a big thing for NVIDIA itself, because each of these gigafactories will be equipped with 100,000 GPU chips, which translates to about as you can see in the bottom left corner, based on our assumptions, this will translate into about 11 billion revenue for NVIDIA itself. So 11 billion revenue is about 18% of their FY24 revenue. And this is in AI GPU chip revenue alone itself, and not including their networking switches, their software subscription revenue. Yeah, so we do think that there's further upside coming from Europe. And we do think that Europe presents a very significant opportunity for NVIDIA, because if you think of hyperscalers in Europe, you cannot think of any names which are being homegrown in Europe. Whereas if you think of hyperscalers now, you'll think of names like Google, Meta, Amazon, and Microsoft, which all comes from the US. And these hyperscalers, they will build massive AI factory in US itself, whereas in Europe, their AI factories are just not at that kind of scale itself compared to the US. Yeah, so we do think that there is still much more upside for NVIDIA, because of the fundings being announced to construct the additional 4 AI gigafactories. If you look at the chart on the right itself, this shows the semiconductor revenue by region. So the orange line represents the semiconductor revenue by America region itself. The red line represents the APAC region. So as you can see, for the orange line and the red line, they have spiked up in 2024 itself because of demand from China and US data centers. However, for Europe itself, it has been quite lackluster. It has been even went on a decline for the past few months. So we do think that the Europe region itself will experience the same kind of uptick in terms of revenue growth because of these announcements in funding, which we do think will bring the next wave of growth for NVIDIA itself. Yeah, so that's all from my end. I'll hand over the time now to Farm. Thanks.
Hey, thanks, Ivan. So I will be presenting on the Microsoft. So let's take a look at the Microsoft updates. So some of the news that I think are noteworthy for us to know is that the first news, Microsoft announced plans to lay off about 9,000 of their employees, right? This represents about 4% of their total global workforce based on their FY24 numbers. And the employee layoff includes a wide range of teams, roles, regions, and experience level, meaning this time it's not specifically performance-based. So, and this also followed that 6,000 layoff in May, bringing the total to roughly 15,000 employees were laid off. So according to the company executive, the move is part of the ongoing effort by Microsoft to streamline their operations, reduce the middle management layers, which is, I think, the most important part. They mentioned this many times, and to eliminate the redundancies that within their workload. Second news is that in the conflict between Microsoft and the OpenAI, so Microsoft had a brief overview of the relationship. For your information, is that Microsoft had a very long relationship with OpenAI, I think since 2016. So even among the first in the AI industry, because they are among the few first that started this AI race, right? So Microsoft brought in the capital and the data centers, while the OpenAI brought in the talents and the breaking throughs in the AI industry. So it's a win-win situation. Microsoft had the AI integrated into the Azure cloud services, which in return had their super growth 30% year-over-year every quarter, while OpenAI have the Microsoft data centers and cloud to host their AI model, right? So, but recently, Microsoft and OpenAI are in conflict over a clause letting OpenAI to cut Microsoft access to AI to OpenAI AI if the artificial general intelligence, which is called AGI, is achieved. So, what is actually AGI is that it refers to the AI that can understand and adapt like a human. So, this is slightly different from the ChatGPT or the Microsoft Copilot that perform specific tasks and need a human help for the training. So they're saying that AGI is like human, right? So aside from them having this database that they can make their own prediction fast and all that, they also like human. So you don't need to tell them what to do. So there's like can think of its own. So it's like super AI, I would say. But really, actually we think that no one in the market really knows what that set the standard for the AGI. So it's a gray area at this point. But the CEO of the OpenAI, Sam Altman, claimed that many times recently that OpenAI is moving closer achieving this AGI. So, but this could be really bad for the Microsoft, we think, because they want the clause to be removed to protect its exclusive right to the OpenAI technology, at least until 2030. So, our comments on the layoff news, partly we think because of the integration of AI into Microsoft workload. For example, recently they claim that 30% of their codes are currently done by the AI. So, but this kind of layoff, right, when you look at it, is so big. I think it's like the biggest layoff we have this year for the tech companies. So we think that it is more likely reflect that the company's effort to cut costs amid their huge Microsoft 80 billion plus of capex in their AI infrastructure for their AI and cloud capacity. So it's more like they are trying to cut costs to retain their bottom line instead of saying that they are laying off people just because of they now integrate AI into the business. That is one of the factors, but more on the cut cost we think. So especially since they are continuing to targeting double-digit growth for company that is massive as Microsoft, also that they mentioned that they are increasing their capex for 2026, which is higher than it is right now for this year. So we think that the layoff is more to protect their profits and protect their lead in the AI races. And for the second news, that the dispute with OpenAI may risk Microsoft losing the exclusive access to the OpenAI advanced AI technology, which could weaken its competitive position and hinder its long-term strategy for integrating AI across its product and services. But really, it's become too complicated with more parties coming in, joining, such as SoftBank, right, recently with the 30 billion say, to invest in OpenAI, and Oracle's joining also. So no one really knows how it could be in the future. But Microsoft is already, remember that Microsoft is already the leading AI and cloud services developer. And also aside from the OpenAI, we think that they also have their other option for the AI model that they can work together in the future. I mean, you heard a lot of kind of AI model this day because it's no longer 2016, but it's already 2026. These AI races have been going on for 10 years already. So a lot of companies that giving more options for Microsoft to work with in the future. Like for example, recently, they featured Elon Musk with his AI company XAI in one of their conferences in June, the Microsoft Build conference. So it's like one of the another options for AI model that Microsoft can work with, right? And to simply put that we consider both the layoff and the OpenAI dispute unlikely to pose an immediate risk to the Microsoft performance, while the layoff is not great for the employee, but it helped the company to retain their bottom line. And we just have to wait for how the dispute will unfold, but unlikely to affect cloud services Azure performance. It is unlikely to affect the performance of their cloud services Azure in the near term, as we think that demand is still strong, right? So we continue to hold the target price of $480 for Microsoft. Next slide, please. Right, next moving on to Tesla, which is covered by Glenn, but I will present on his behalf. So there were 3 worrying news on Tesla last month in June. So the first news is about its robotaxi launch. So Tesla launched its robotaxi pilot program recently in June, but it's not doing well. there were some hiccups along the session. So it's not. So the earlier claim was that the robotaxi was supposed to be completely self-driving, but they were not. They have a human in the front seat. And furthermore, the main hiccup was that the robotaxi went over the speed limit, even went to the wrong lane, and then they brake suddenly, so it's not completely safe for the people to use. So hence this prompted an investigation by the transportation safety regulator in the US. Second news is that Tesla released its second quarter production and delivery figures, which was also disappointing. There were about 410K vehicles produced, but the growth was flat year over year. And on the other hand, 384 vehicles were delivered, but it's a decline of 13% year over year for the second consecutive quarter. So we think the main reasons of the decline was because of the continued competition from the Chinese EV makers. Elon Musk close association with Trump, and nowadays consumers were waiting for the release of the facelifted Model Y of cheaper vehicle. For the last news, Elon Musk has had a fallout with the President Donald Trump in early June. The Tesla CEO Elon Musk publicly criticizing US President Donald Trump, Big Beautiful Bill on the social media. Trump threatened to cancel the federal contracts and subsidies for Musk company, which also include Tesla. But Musk later publicly apologized for his bad statement. We see that the stock market price plunged a little bit for Tesla in the following few days after this public feud. But then again, the stock price market picked up a little bit, although slightly. And then for the share price performance, Tesla share price took a significant hit in June, 8% price decline for the June. We think that the decline was very broad-based due to the worrying news that we stated earlier. They have so many bad news, right? And then furthermore, what we look in the future for the outlook, there would be some headwinds from the China's competition, and tariffs are still present. And we are starting to see Tesla losing market share to the Chinese EV makers outside of their home country, for example, in Europe. Hope for Tesla recovery depend on the recovery of its robotaxi launch and the positive reception to the new Model Y in the third quarter. However, we remain cautious for Tesla, given the multiple headwinds, including tariff, loss of tax credits and market share decline in China. We maintain our sell recommendation and target price of $200 for Tesla. Next slide, please. Next one is for Amazon. I will be covering for Helena. First news is that Amazon is working on making its delivery services, the e-commerce, faster and reaching more places. With the $4 billion investment and the help of their smart technology to guess what people are going to buy in the future. So they claim that this would help to extend the company's delivery services in 4,000 smaller cities, towns, and rural areas by the end of the year. Furthermore, the company is also spending a lot to improve their deliveries in other countries, not only in the US, about 54 billion in the UK and 233 million in the India. And another news is that Amazon is to invest 5 billion to build South Korea's largest data center, which would be the largest Asia country's largest data center. All right, our take is that Amazon is putting a lot of money into building its infrastructure and expanding its delivery network around the world, even though it's dealing with a higher tariff and global uncertainties. So this shows this signal that Amazon is staying ahead of the game, even with the slower consumer spending. But at the same time, Amazon keep investing in its data center, showing it still strongly believes that its future growth of its cloud business, AWS. So we have a buy call for Amazon with a target price of $260. So that's all from me. I will pass to Serena for the rest of the MAG-7 companies. Thank you.
And thank you, Fahmi. Good morning, everyone. I'm going to start with Meta. So the company actually announced that they will start to run ads on WhatsApp status, which will allow the user to actually interact with the advertiser. So this is like 11 years after they acquired WhatsApp for $19 billion. The Meta also plan to actually monetize the channel through subscription and search ads. So currently, moving forward, the channel operators actually allows to spend money in order to boost their visibility and at the same time collect subscription fee from their subscriber in exchange for any exclusive update. So in the long run, they actually plan to charge a 10% of the sales, which at the beginning they will not charge any commission. But all the changes, they do clarify that all the changes were only applicable to the update of the features, so it does not really affect the personal chat. So we do believe that this strategy actually aligns with Meta long-term plan, because they have been talking about how much that they want to monetize their business messaging segment, which is growing quite significantly. We also think that the plans will help to create a new revenue stream for Meta beyond Facebook and Instagram. Because moving forward, they're planning to spend approximately like 72 billions in capex. But overall, we do think that the contribution will be modest, because under this app, Meta only has a limited access to the user data for precise ad targeting. Currently they're only allowed such as like info about the user's country or cities or language, so that we think that it might lead to a lower ad space price compared to other platforms. At the same time, we also do remain cautious about the privacy concern related to the monetization effort on the platform. And next, for Alphabet, the next slide, please. Yeah, thanks. Yeah, the company is now potentially losing their appeal to the 4.1 billion euros antitrust penalty involving the Android. As the Advocate General of the European Court of Justice actually suggests that the fine should be upheld. So for those who does not really know about the case, just a little bit of brief. So in 2018, the European Commission actually found that Google abused the dominant position in a mobile operating system, in this case, which is Android, by forcing the smartphone manufacturer to actually pre-install Google apps like Search or Chrome, and although at the same time restrict the use of the alternative Android version. So EU actually found this practice anti-competitive, and therefore they impose a fine on it, and the penalty amount is 4.1 billion euro. Is also the largest antitrust penalty ever imposed by the EU. So even though the opinion is not really a final ruling, but most of the time the court actually take quite a lot of consideration when they made the final decision. So we do believe that the decision might lead to a strategy shift in Android business model within the EU region, because the Android currently hold about 45% of global operating system market share, and specifically for mobile, the market share is around 74%. And it's really closely tied to Google profitability, because Google do charge a commission ranging between 15% to 30%, depending on the revenue from the app developer. And at the same time, the default search engine could actually allow them to access to a huge user data in order to push the advertising business. But overall, we still remain positive on their core business segment, in this case, which is advertising and cloud, because we do think the AI-driven enhancement actually will lead to a better ad targeting capability. And then in terms of the Google Cloud, we think that it will continue to benefit because of the AI spending. And the second one is because of the improving supply condition. And lastly, for Apple, which is covered by Helena. Next slide, please. Thank you. Yeah, so the iPhone performance in second quarter remains strong. So the sales actually took a top spot in China, and global sales actually rose 15% year-on-year across April and May. This is actually driven by the rebound from two of the biggest markets, which is US and China. We also do see the double-digit growth in regions like Japan, India, and Middle East. Although there is a boost in iPhone sales, we do believe that it is unlikely to be a long-term positive signal, because the surge, instead of its organic demand growth, is actually the consumer actually rushing to buy the device, because they do think there might be a potential price increase because of the tariffs. And at the same time, the deeper concern actually lies on, currently Apple has not yet introduced a significant upgrades tied to the AI, so making it very unlikely to have a new product upgrade cycle. And at the same time, they do face quite a stiff competition from in China, from the local competition, because they do offer their device at a lower price at the same time, so that it will puts a little bit of pressure on the growth outlook in the China market. Next slide, please. So overall, MAG-7 actually rebounded around 20% in second quarter. This is driven by the strong digital ads growth because of the price improvement. And at the same time, the cloud hyperscaler actually do see their rising demand, especially in the GPU as a service. And then the AI optimization is also boosting the margin. But then the trade will actually support the iPhone sales, but the Apple Intelligent, but weak Apple Intelligent features are actually unlikely to drive a new upgrade cycle. And then global EV sales is actually growing as well, but Tesla is actually losing the market share because of the tough competition and also the price pressure. But overall, we actually maintain overweight on MAG-7. We do expect the earning growth to beat the forecast, and it will outperform S&P 500 and Nasdaq 100. That's all for MAG-7. I'll pass the time to Darren.
Yeah, thanks, Serena. Yeah, so I'll run through NTT DC REIT, which is slated to be listed in SGX later at 2 p.m. Yeah, so NTT DC REIT, if you not know, is a data center REIT that's sponsored by NTT Limited. So NTT Limited, their business through their NTT Global Data Center is a sponsor. Yeah, so for NTT, the IPO price is at $1. The market cap at IPO is about 1 billion. So the AUM consists is 1.6 billion. It consists of 6 data centers in 4 in the US, so 3 in North Carolina, 1 in Northern Virginia. So Northern Virginia is the largest data center geography in the world. 1 in Vienna, and the last one in Singapore. So Singapore is a co-location data center. And currently they have 6 assets, and it IT load capacity is 90.7 megawatts. So for the IPO details, I have another slide later that will show the initial shareholders, but 600 million units are available for subscription. So about 30 million only was for the Singapore public offer tranche, and that itself was 9.8 times oversubscribed. So the initial private placement of the remaining 560 million was 4 times oversubscribed. So yeah, like I mentioned, that the NTT DC REIT is going to start trading later at 2 p.m. And for now, the cornerstone, I mean, not for now, but the cornerstone investor is GIC, among others. So that is 9.8% of the current shareholdings. The sponsor, NTT Limited, holds retain a 25% stake. So yeah, NTT Global Data Centers, if you do not know, is the 3rd largest DC provider in the world. Yeah, currently the portfolio of these 6 assets, its occupancy is 94.3%. The WALE is 4.8 years. And if you look at the charts on the left, on the right, so for their tenant mix, or rather their data centers, 49% is co-location, and 51% of it is hyperscale. And for their top 10 tenants, at the bottom right chart, you see the 31% is from the Fortune 100 US automotive company. Yeah, if you do not know what that is Tesla. So there are some headwinds that Tesla is facing, like my colleague Fahmi had mentioned earlier. So Tesla being the major tenant, that might dampen some sentiment there. But generally speaking, Tesla's lease is, the WALE for Tesla's lease itself is 9 years. Is 8 years. Yeah, so the risk is not very high there for lease renewal or lease break. Yeah, but other than that, in my next slide, I also have a lease expiry profile. So most of the leases expiring in the near term is still co-location leases, and every year there's not more than 20% of leases that are expiring. Yeah, so for the capital management perspective, 35% of it, the leverage is 35%, and they do not have any debt that's maturing in the next 3 years. ICR is healthy at 4.1 times, and currently they are 70% hedged. So their portfolio has rental escalation clauses. So about 75% of their portfolio has an average of 3.3% annual escalation. So it ranges from about 1% to 7%, and 3% is on CPI-linked escalations. And from the sponsor pipeline, the sponsor holds over 200 or rather 2,000 megawatts or 2 gigawatts of data center assets. So entity DC REIT, they have the right of first refusal for these assets. And in the near term, they have already identified 130 megawatts that are mostly Europe that are primed to be injected into the portfolio within the next 5 years. So that will basically double the IT capacity. Currently is 90.7 plus 130 megawatt will be over 200 megawatts, and that will also basically increase AUM by almost twofold. And for the outlook, they do not have any significant capex required, as all of the assets were recently refurbished. Like the 2024 were the latest refurbishment for all the assets, and one of it just completed in 2024 as well. Yeah, so on first glance, actually this NTTD series, it looks very attractive, as the initial yield is 7.5% compared to a lot of its the other two peers like Digital Core and Capital DC. So Capital DC, if you know, is trading at about 4.5% dividend yield. Digital Core is trading about under 7%, so it's about high 6%. So NTTD REIT looks very attractive at this $1 IPO with a 7.5% dividend yield. So that is initial yield. But from our thoughts, there are some risks. So one of it is, first of all, is that for instance, Capital DC REIT, they pay 20% of their management fee in units, but for NTT DC REIT is 100% in units. So over time, this 7.5% dividend yield might slowly get diluted as more and more management fees get issued in units. So that is one of the diluting factors. Another one is that for Capital DC REIT, for instance, they also set aside a capex reserve. So NTT DC REIT, their distributable income, or rather their payout ratio, is 100% for the first year. So they've not set aside any capex reserve for any capex. But that said, they do not have any significant capex requirements in the near term, like I mentioned. But just mentioning that they have not set aside any capex reserves, and going forward over the next few years, their payout ratio might drop from 100% to lower, like maybe similar levels to companies like between 90 to 100%. So if that happens, the dividend yield will also drop from this 7.5%, or rather the absolute DP will drop, assuming the share price maintains constant. So that is another headwind. And another headwind that is our view is that, of course, like I mentioned, that the Tesla being the 31% stake. So all these headwinds that Tesla is facing, like Elon Musk and Trump on whatnot that Fahmi went through, all this might weigh on sentiment a bit for NTT DC REIT. So these are some of our views that we have for this. Yeah, I'm going to move on to the next slide that shows some more detailed stats or factual information on the IPO. So the top left-hand corner is initial shareholder. So originally, of course, the sponsor owns 100%. So after the IPO, sponsor will maintain a 25% stake. And GIC owns a 9.8% stake. So other cornerstone investors that excluding the IPO is owned 7%, and the public and the private placement tranche during this IPO was 600 million. So that is about 58.2% of stake. So that brings total market cap about 1 billion. And the bottom left is the more details on the assets specifically. So I'll just leave the chart there. You can take a look. And at IPO, 70% of the loans are hedged. And that's the currency breakdown as well, 45% in euro. And the lease expiry profile is on the bottom right. As you can see, most of the leases, there's no year that has a lease of more than 20 years. And most of these leases that are expiring over the next few years are co-location assets. Yeah. So that's all we have for NTT DC REIT. Yeah, I'll hand over time to Miana. Thanks.
Thanks, Darren. Also, we had a site visit to Frasers Property Ltd. Next slide, please. Yeah, so this is a 999-year-old leasehold development in Singapore's District 9, which is a redevelopment JV project between Frasers Property Ltd. and CKSU House. And public a preview for the Robinson Opus began at 5th July, which is last week. Yeah, 2 weeks ago. And buyer interest anticipated to be robust, as this is the only 999-year-old leasehold development in CCR region in 2025. And this is also well located nearby a lot of key amenities, such as River Valley Primary School, and also is around 5 minutes walking distance to Frencken MRT station. And FPL is currently in the process of receiving checks, with the cutoff date set to be 15th July, which is tomorrow, Tuesday. Yeah, the indicative pricing starts at 3,150 per square feet, but the final price is still depending on the demand, yeah, which is the amount of check they receive. Sales booking are scheduled to commence on 19th July. And according to FPL, demand is primarily driven by Singaporean who are looking to resize their existing condo rather than HDB upgraders who typically prefers a 99-year leasehold property. And sales to PR and also foreign buyers are anticipated to make up less than 10% of the total demand, due to the high ABSD. And the recent increase in sellers' stamp duty is unlikely to have a material impact, as buyers are purchasing for legacy planning purposes, and some of the buyers are even acquiring units through trust for future generations. And the expected TOP is 2030. Yeah, but they plan to there will probably be earlier delivery at around like second half 2029. And buyer interest has been stronger for two better units. And the units they adopted a barbell-shaped layout with living room in the middle, and there's like 2 bedroom at each of the side. Yeah, so this allowing for efficient space utilization. Yeah, and the car park lot to unit ratio is 80%. Since FPL expects some portion of the units to be rented out to like foreign expat. Yeah, who typically doesn't own a car. Yeah, so on the right there are some photos. The top right is the photo for the whole redevelopment project. Yeah, and the bottom is the photo for one better units, which is around 460 square feet. And for ventilation purpose, they have a ceiling fan for the one better units. Next slide, please. Yeah, we do expect July to be a very crowded month for property launches, since there's like 6 projects to be delivered, a 6 project launch totaling 2,611 units for release. And Robinson Optus stands out as the first 999-year leasehold residential development to be launched in the River Valley neighborhood in nearly 2 decades. And the sell-through rate for Linden Woods is very strong. They're already still like around 95%. And in contrast, W Residence is not that promising, and they didn't disclose the number. Yeah, next slide, please. Yeah, so here are some pictures for the most popular 2 better units for Robinson Opus. Yeah, so on the left is the living room and the and the bedroom, and in the middle is the kitchen, living room, and on the right is the master bedroom. And they do have a very small study, so it's a 2+1 unit, totaling 743 square feet, which includes like around 2.5 square meter for aircon ledge, and also around like 3 square meter for balcony. Yeah, that's all for me. I'll hand over to Ding for technical pause. Thank you.
Thanks, Mel. Morning, everyone. I'll move on to the technicals. So first slide on the S&P 500. Last week, you can see that it's quite sideways at the all-time highs, but the price is still just reconnecting with the 5 and 10-day moving averages, the red and blue line you see in the chart. So just consolidating sideways. I think we could see some further consolidation going ahead. Some resistance for now is at around 6,280 to about 6,350 area. Or support is likely to be at 6,175 to 6,240 area. Then I'll go through the summary of the trades initiated last week. So first one for DPS is currently up about 0.5%. For ST Engineering is down 1.5%. For Circle Internet it's down 10.5%. For Lei Chun is down 1.3%. For ISO Team is up about close to 9%. Full Empire is down 1.5%. For the iShares Bitcoin Trust ETF is up 5.7%. For Geo Energy Resources is up 2.9%. And for Raffles Medical currently down about 1%. As for Singtel is up about close to 1.5%. So that's all for the current progress of the trades. I'll hand over time to Paul to talk about the weekly. Thanks.
Yeah, thanks, Zane. Next slide. Thanks. So for some of the macro numbers, obviously a lot of blanks because there wasn't really much macro data that came out. The one that came out was Singapore foreign reserves. So we'll brief a bit deeper later, but Singapore will continue to get huge inflows. So if you look at just June alone, we got like 3 billion, and May was 12. April and May we saw like 20 billion US dollar of inflows into the country. Likely due to the Liberation Day scare, so and I guess that's why the US dollar also depreciated. But they give you a sense, so far this year, the first half, we almost 33 billion US dollar versus last year was 21, which is already a very high number last year. Some of the data from the US, not much, but basically just a snippet of what's happening in the employment market in the US. About 1.96, it's still the highest in 37 months. Sorry, it's not 3.1 here. Yeah. So the labor isn't robust. I mean, it's slowly deteriorating, but I think nothing really alarming. Yeah. Next, loans growth was still healthy. At least the loans is picking up the fastest in almost more than 2 years. Yeah, sorry, it's not 3.1, it's 37 months. Yeah, sorry. Thanks. Next slide. So in terms of our usual, just our tactical views, we still a bit concerned the market is ignoring the trade war risk. And rightly so, of course, because the taco trade that is Trump always chickens out trade has been profitable. I mean, to go against it, you probably lose money. But we just worry that because of the record high equity prices, record high gold, record high, we just think that this could backfire and maybe embolden Trump to kind of become more aggressive in his tariffs. We've already seen it. Of course, 1st August is the deadline. So as a result of this, we are turning a bit more positive on REITs. I think as the trade war risk starts to reignite, and firstly, number one is that there is a negative impact on the tariffs. Some Federal Reserve study shows that the tariffs in the longer run, but they never really put in the study what is longer run, but they just put that the impact to the US economy and global economy is maybe 2.4 and 1% GDP. The second reason for REITs is just that the Singapore interest rates has actually really collapsed. Although we focus a lot on the Federal Reserve, but I think the last 1 year, I think the short-term rates has dropped at least 100 basis points. I mean, based on my calculation, yeah. We'll show you a chart later. And the third reason is, but just that the Fed is unlikely to cut rates in the near term, but we already see the interest rates in Singapore already started to drop very sharply, and this makes REITs more attractive. And because based on, again, another Fed study, I have to go and read all this, but anyway, based on the current tariffs, the impact on PCE inflation, which is the one that the Fed uses, you should expect inflation to jump up almost 2.5 percentage points, the impact. But of course, these are all estimates because it depends whether the importers pass it on, how consumers react, but this is just a rough gauge. Our third point in our weekly strategy note is that we like was mentioned by Yip Ban, I think, at least from our perspective, we like Frencken because it's a proxy to a monopoly. I mean, ASML is clearly a monopoly in high-end lithography. So for those who don't know high-end lithography, you actually put prints on the semiconductor, but each machine can be like 300 million US per machine. So for us, Frencken, we like it because they are riding on ASML's organic growth, which we will know later when they release the results on the 16th. That is already growing organically, but on top of that, why we initiate Frencken after so many years is that Frencken is also manufacturing the very high-end product range for ASML. I think there are some questions there. I'll leave it to Deepan to explain. But so and these products haven't really ramped up yet. So this is the latest ASML lithography, the EUV, which hasn't ramped up. Of course, it's already generating revenue, but it hasn't gone mainstream. So it's a bit like trial production, but of course, one machine is very expensive, so they can still generate revenue. So you still haven't get that big ramp. And the third reason is that ASML is also starting to outsource production of components from Europe to Asia. And I think Frencken is taking the lead in that. So this will be another growth impetus for Frencken on top of just ASML's organic growth. And of course, the fourth reason is the valuations are 13 times against industry 20. And even GVT themselves was taken out private for 29 times PE. The events, the key one, there are a lot of bank. So for this week, the highlight will be all the banking results. Okay, the GDP here, Singapore second quarter, I don't think it came out because they don't give a hard date, so it's a floating date also. But anyway, it could be on this week the GDP will come out. Then ASML Netflix results. For some of the webinars we have this week, I think next week should be Money Hero, yeah, listed in the US, yeah, but Singapore company. Next slide. Okay, so this chart basically shows the attractiveness of REITs. I mean, this is basically the yield. That means how much dividend yield you get extra on top of the 10-year government bonds or Singapore government securities, SGS. If you can also replace SGS with the Singapore savings bonds because it's more or less the same. So right now you are getting additional 2.8% incremental kind of interest rate, incremental yield. And this can actually improve further because as interest rates drop, the usual trifecta, you get better valuations, lower interest expense, and of course the yield differential even better. The one on the right here is just to show the sharp collapse. So SORA is the Singapore interbank, used to be called SIBOR, but now I call it SORA. But so you can see the red line here, it is a huge collapse since the last 12 months, and this will be of course beneficial for mixed REITs more attractive compared to SOFR, which is the US interest rates in blue. I think right now SORA is about 1.68. I'm talking about internet. Overnight rates. I think 3 months is probably about 2%. So this huge divergence is also because there's a lot of liquidity coming into Singapore. Next slide. So this is the same chart we showed during our strategy, but just to explain, the red bar here you see here is the cumulative. That means the last 12 months, how much inflow gone into Singapore in terms of the reserves. So of course, since the pandemic, 2021, 22, you can see this big jump. And right now, the inflows year to date is about 33. So 33 is huge. I mean, compared to 2024, the full year was about 20 billion. In bracket, it's just a guesstimate because a lot of the money actually taken out by MAS, the reserves, and then passed it over to GIC. So if you add back the 260 billion, the reserves that Singapore has is probably for 600 or maybe almost 700 billion so there's almost like 700 billion compared to pre-pandemic. Our reserves was only like 200 or maybe 300, so it's almost like more than double. So obviously there's a lot of inflows coming in. If you look 2019, we only got like 8 billion. This year already 33 billion. So there's a lot of liquidity coming in. There are many reasons. I mean, you can, of course, the main one is because of the safe haven status. I don't think the money is coming here because of a high interest rate. It's like we just showed you, it's very low. It's probably like something like a Switzerland kind of situation where they see Singapore currency as a safe haven compared to the US. Especially from China. Yeah. Next slide. Okay, the one on the left is, so there's a lot of trade numbers here since we're all talking about trade. So far we don't really see inflation entering to the US market. If you look at this chart on the left, so this is the import price from all countries excluding petroleum. Even China import price also, we haven't really seen it up. But if you look at the Fed study on the right here, so the not to go into the weeds here, but the inflation about 10% is impacted by imports. So higher import prices will affect 10% of the index. So China alone is 1.3. So if you just do some numbers, a rough envelope, the impact 55% tariff, rest of the world 20, you're talking about maybe a 2%. So the Fed might only cut rates later end of the year because this higher inflation might need to filter through first. But I mean, it doesn't matter if you're Singapore investors because it's really dropping for Singapore. Next slide. Okay, so this is, I think everybody knows this is already in the news, but just to show everyone, the 1st August deadline tariff. So the one that is important for us as from us for Singapore investors will be, of course, Vietnam and Thailand, because Vietnam and Malaysia, because a lot of the manufacturers, a lot of the semiconductor companies like Venture, Frencken, UMS, you can name it, they're all in Malaysia. So this will impact them if this thing holds. But of course, depend on the destination. Some of it goes to Taiwan and so forth. But again, this is just for your just for info purpose. I think everybody already knows this. But anyway, yeah, I think this is my last slide. We can next slide. I think I can move on to Q&A. Sorry. Okay. Again, just to show. Okay, apologize. Just to show that even before the tariffs, import activity has already started to drop. So on the left here is the container imports into the US. So if you take this as face value, it does shows that global growth will be impacted because US is the country that is pulling up global GDP because of all these consumer spending imports. But it is starting to drop. And even the surplus, the deficit that is China is enjoying is collapsed. The blue line here, and in total also dropping. ASEAN also dropping. Europe still holding. There's also impact on the inflows because usually all this surplus goes back into the US as portfolio inflows. So maybe that's also why there's also less inflows and might affect the asset prices in the US. In theory, of course, I mean, the US market rally means US market rally. But anyway, just to show you there's already a slowdown even before the tariffs. Okay, yeah, I think this should be my last slide. Yeah, sorry. Next slide. Okay, thanks everyone for listening. I think we can go to Q&A. Thank you.
Yep.
Yep. Oh, sorry.
If I
Darren, you go ahead.
Okay. Then I'll just answer a few questions. Yeah, there's one. Hi, Darren, what's your take on the expectations of opening price of NTT-DC REIT? Yeah, so this is just my take. So usually when an IPO is so much oversubscribed, right, like 9.8 times for the retail tranche, 9.8 times oversubscribed, then usually at opening, I believe the price will not say spike, but will probably increase more than $1. So yeah, that's just my view. I think later at opening, the price will likely increase over $1. But like I mentioned in the presentation, over time, I still believe because of like capex reserves and the maximum fee fully paid in units and such, the dilution effect and the dividend yield will likely decrease, and over time, I think the share price also might come back down. Yeah, but I think in the near term, yeah, I still believe that the share price will jump after or at opening later at 2 p.m. Yeah, that's my take. Okay. Yeah, there's another question on what's the target price for NTT REIT in the long run? Yeah, so it just haven't list, so that we don't cover as well, but we attended the initial briefing, so that's what we got during my presentation. Yeah, from that. And there's one question on REITs. Some view that tariffs will impact industrial REITs. What is PS view on tariff impact on S-REITs assets in various countries? And which are your favorite REITs now and why? Yeah, so you're right that tariffs might affect some industrial REITs, so we are continuing to monitor that. But in the first quarter, when after the news of the tariffs, most industrial REITs, they also mentioned that their exposure to the US or anything, like any business that they do with the US, that export to the US or anything of that nature, accounts for like less than 10% of their portfolio. So a lot of the industrial business is internal, like with their own geography. So do not do any business with the US. So they are not really impacted. Yeah, but we are continuing to monitor that situation. Yeah, that's for the general industrial and logistic assets. But yeah, definitely the industrial subsector might will be likely be more impacted by the tariffs than the others. So the other subsectors that might be affected, like if there's a recession, for instance, there might be a slowdown in consumption and consumer spending. So hospitality might be impacted, retail also might be impacted. Yeah, office leases also, the tenant demand might slow if there's an economic slowdown, but for now, we still don't see much news. During the Liberation Day, it was noted that some of the tenants, they waited, like they took more of a wait and see approach, but the demand has come back so far from what I know. We will continue to monitor that, and we will have more updates after the first half results. Yep. So that's right. Yeah, I think that's all for me. I want to Iman. Thanks.
Yep. Thanks, Darren. Take on some questions. So first question on Sunday Environmental. Sunday Environmental's price has been performing quite well lately. Is there any further upside? Yeah, we don't cover Sunday Environmental. So try to give some insights on this. Yeah, I took a look at their market cap. Recently it's spiked up. Currently it's trading about 47 million market cap. Their revenue for the latest FY is 100+ million in revenue. So if you look at the price to sales ratio, it's about 0.3. And currently, the typical construction company, they are trading at a price of sales about 0.4 to 0.5. Yeah, so if you look in terms of valuations, there is still a bit of further upside going ahead, in my opinion. And I think for Sunny Environmental wise, I think their strength lies in the ability to secure projects from PUB. They have a very close partnership with PUB and also a very long track record. That's why recently the price spiked up a lot because of their announcement of a pretty big project. I think 100 million from PUB itself. Yeah, so I don't think there is a further upside ahead. Yeah, hope that gives some insights. So question, why the TP of NVIDIA is still 145? Yeah, so I think my colleague answered some question regarding why we don't update the TP according to the price movements, because from our standpoint, when we issue the reports based on fundamentals, we will revise the target price based on the company's earnings calls, and maybe if there's any announcements or maybe any material updates that they provide. Yeah, so we will only revise the target price when we issue the report itself. If we so we don't base it based on price movements. Yeah. Yeah, there's a question. Do you know who are the second source of key component that ASML is buying from Frencken? Yeah, so as mentioned, I don't know, and from based on my knowledge now, there's no second source. Yeah, Frencken is the sole supplier for this particular component itself. Yeah. I think why is okay? So there's a question: why is Grand Venture trading at below 94 cents the overprice? Yeah, I think this is just part of the price movements. I think it's been hovering around that level. Yeah, so yeah, it won't be like flat. It will fluctuate here and there. Yeah. Any insights on Lam Chang Creations IPO? Yeah, I think for more color, you can refer to last week's recording where I presented the Phillip on the ground. But I think the general story for Lam Chang Creations is they are focused on the A&A side as well as the conservation side. So because Singapore has more emphasis on conservation of old buildings, for example, the Chinatown shophouses as well as the Singapore monuments. There's about 72, and less than half of it is being renovated. So this provides the kind of growth potential for them. But I think all in all, ultimately they are still quite a small company within the construction space. So if you want to invest just to get an exposure in construction, I personally would not recommend Lam Chang Creations. I think there's a lot of much bigger stocks out there. For example, building materials, Pan United, PSC Asia, or like for example Soy Build, which have like 100+ million market cap. Yeah, compared to Lam Chang, I think 70+. Yeah. There's a question: will Frencken be in any way affected if Trump announces new tariffs on semiconductor? Yeah, I think firstly, I think that there may be an impact in terms of news flow, because when this kind of news come in the short term, people's sentiments will change to become more fearful. Yeah, so I think firstly that is how the potential impact on Frencken. Otherwise, fundamentally, the impact of tariff on Frencken will not be very material, because based on last year's revenue itself, the exports to US make up about 9% of Frankken's revenue, total revenue. Yeah, so this is lesser compared to its local peers. For example, AEM, UMS, and AEM and UMS. So both of these companies, their exposure to US is more than 10%. Yeah, so I think relatively it will still have a lesser impact compared to its peers itself. Yeah. I think there's a question. Please flash the slide for Frencken. Maybe Zane can help to do that. Yeah, thanks. I think that's all from my end. Thanks.
Meow, can you answer some?
I'll answer one questions. It says that the EU mentioned that they might retaliate US tariffs by taxing global tech e-commerce income in EU. Any insights on this? Yeah. So for this one, let's say that if assuming that it really started to implement the retaliation tariffs, it definitely will squeeze the margin for company like Meta and Alphabet. But currently, actually, I still believe that they are more leaning towards to have a trade negotiation. And the secondly, do believe that the impact will be a little bit modest, because one, there are not really much alternative when it comes to the advertising business, and secondly is that the company's AI spending actually makes their advertising targeted capability improve quite a lot. So I do think that the advertiser is still willing to spend in order to reach out to their potential clients. Yeah. I think that's all. I think I can pass the time to Mel.
Thanks, Serena. Any fundamental changes for Sasser rate going forward in the view of Trump's tariff on China? By far is still a net positive for Sasser rate. Since like they do see some of the supply flow into the outlet mall at a discounted price. So the product was originally exported to the US, and because of the high tariff, yeah, they changed it to domestic consumption instead. Yeah, so this will help to expand consumer choices and also rebalance some of the product mix. And patriotic consumers is also likely to support the made in China rejected by US product, since like national brand is very trendy in China now. And given the decreasing LPR rate, yeah, which is on China's borrowing rate, we do believe Sasser rate is able to have some like acquisition this year. Yeah, but not likely to be their sponsor's own project, but other like discounted or like yeah uh, outlet malls or developments by like other developer. Yeah, this is possible. Yeah, but we hope to see some of acquisition this year. Yeah, hope it answers your question. I will hand over to Darren probably or Ben. Yeah, thank you.
Yeah, there are a lot of other questions regarding the entity. Yeah, I already answered those. So yeah, please feel free to just look at the recording. Yeah, thanks. Yeah, we do not have a fair price for NTTDC as yeah, it's just haven't IPO yet and we do not cover. Yeah, and yeah, another one is I think I saw one on the latest update on Takraw. Yeah, so Takraw, yeah, no recent update, just that it recently the Gem Life got listed, so we already covered that as well, and yeah, we have more updates after the first half results. Let me see if there are any. Okay. Yeah, I think that's all for me. Yeah, thanks. I think Paul wanted to speak. Yeah, thanks. Hand over to you. Thanks.
Oh, yeah. No problem there. Yeah, thanks. Yeah, thanks, Darren. So let me just try to answer as many. Then we hand it over to Zain. Hi, Paul. Any update views on QNM and Banyan Tree? Banyan Tree, nothing. We tried to reach out to them, just kind of, I guess, kind of ignored us. But anyway, in terms of QNM, we are looking for healthy results. I think our expectation is probably low teens kind of growth, mainly for margin expansion. Yeah, because we don't think revenue will be strong. So margin expansion, because they are doing some very aggressive cost cutting and realigning their dental chain. And possibly maybe they might make some acquisitions, but that's not clear where and when. Yeah, but in general should be still positive for the results. Allocation has risen to the high of 88 cents. Any revised target price? Yeah, we won't. Okay, there were some questions on target price higher, lower. We cannot move our target price every time the share price move up and down, and then keep. Otherwise, we will have like buy, then sell, then up, then neutral, buy, sell, neutral every other month. Of course, that never happens to Singapore stocks. Has always been like doesn't really move much until recently. But for us, we will revise it. I think the upside depend on the Collivu. Two things are the Collivu listing. I think that's all over the news. And secondly is, as a LHN shareholder, how do I benefit? I think that is a very critical question to ask. Do we get dividend in specie? Do we get special dividend? If not, then if it's just a LHN share price, because in the end it will be just just something nice to see. No, there's a nice high valuation for my subsidiary Collivu, but I don't get any benefit. And investors might just go towards the jewel of the business right now. I mean, for now at least, which is Collivu. So it's very important to know as a LHN shareholder, what is the monetization for me? Yeah. Of course, it gets listed, but if I don't get any dividends from it, I don't get dividend specie, then I worry in that sense that it might kind of impact the LHN share price. But I think there have been some brokers initiating. I think they have a much higher kind of PE ratio to mine, of course. Yeah. But when will tariff inflation show up in data? We don't think it probably be in the fourth quarter. If the August thing happens, then probably August, September, it might happen. And because a lot of the inventory already bought, so they might be using. You'll probably see some already by July a little bit, and then more of it will be in August. Because our guess is that importers have already run down a lot of the inventory. Yeah. As we already saw, there's a big collapse in imports, right? So I don't think there's any substitute for Chinese textile or China dolls or China toys or whatever. So I think it will eventually flow through. They will probably raise the price. Yeah, but you will only see probably my guess again. Nobody is probably August and September where they will have to start to raise price. I think we have to watch the US results closely to see what the comments are from some of these big retailers, especially. Is Power close to resigning? I don't think so. I know there's another plot arising. The new plot is that the budget, the new federal building renovation supposed to be 2.5 billion. It got over budgeted by 700 million. So now the US administrations claim that Power lied to the Senate or to the House that about this this is like Thai politics now. So he lied to the Senate about, or the committee, that the 2.5 billion is over budget. Yeah, so but I don't think he will just bow down to this pressure. I think then it kind of makes him kind of guilty of it too. So I mean, that's my own view. I mean, nobody knows, but you should expect all over the news that this will be the pressure point that they're going to go after him, I guess. Why Banyan Tree? So I'm not sure. My latest check on Banyan is maybe they did some launch in Phuket and that has done well. They also managed to secure more management contracts in China, which was the main story for us when we initiated them, I think 2018, around 2017, 2018. Because we thought that they managed to secure a lot of management contracts in China. But then, of course, when COVID came, I think everybody just dropped coverage. So, yeah, but we haven't been able to kind of catch up with them recently. Do you see 1st August tariff rates coming? I really don't know. I mean, yeah, really no idea. I mean, this is up to Trump. We don't think it will be like 25, he go to 15. And his game plan has always been to charge everyone 10%, and he's successful in that. That means he managed to charge all the countries 10%, but no, don't really get much market reaction from it or negative fallback. So maybe he might be just chasing for 15% and he'll be happier. As usual, the 20%, 25% is his stretch goal. Again, really, we're guessing here. Really do not know, but there will be tariffs because I think the US has stated many times, especially the new defense secretary, the new defense advisor. The US wants to build an industrial base because they believe the industrial base is a source of growth and jobs. And they cannot build an industrial base if China and Asia is so dominant, right? So they need to do that. I mean, rightly or wrongly, I mean, it's not for us to agree, but that's how I think is their ultimate objective. Hi, Paul. Wondering why no news on Singapore. I think the 10% okay for Singapore, I mean, it makes us more competitive than everyone. But the problem is the transshipment tariffs. So that one really don't know. As you know, Vietnam got 20% tariffs, but there's also a 50% transshipment. And you know, Singapore is a big transshipment hub, right? We are virtually a port for transshipment. So I really don't know. I'm just speculating here. So the unknown is the transshipment. What's the definition? Which nobody knows. I mean, like, there's no real explanation how you're going to calculate this transshipment tariff of 40%. So the worry to watch, I don't have the answer, of course, but it's just to watch whether Singapore get hit with this transshipment tariff. Yeah, we're probably going to get impacted by the pharmaceutical tariffs because Singapore one of the big exporter of pharmaceutical to the US. Yeah, so these are the two things I'm not part of the negotiation, so I really don't know, but I can just tell you what are the things that to watch out for what it's worth. Yeah. Yeah, maybe it's not useful, of course, but yeah, yeah. Okay. Thanks for the question. How long have you got the payout? Usually 6 months. From based on the previous takeover offers, is usually 6 months to get the deal done. So maybe the discount from the offer price, even if you're an arbitrager, you have to think about the cost of borrowing, the cost of borrowing and lend and sorry, there is some cost. I mean, to wait for the 6 months. So maybe that's why, even if I'm an arbitrager, I won't go and buy it at 94, 93.5 cents because there's still 6 months before the deal gets concluded. Okay, sorry. Okay, the Cecil one, I leave it to Meow Meow. Yeah, okay. Ventures price ran up today, 12.15. What's your target price? My target price, oh goodness, sorry. Give me 1 minute. Let me just double check. But my progress is definitely below there. I think I have a neutral call on venture. I don't expect any strong results. Yeah. Venture share price always kind of overruns before the results. Then I don't know, people might kind of regret it after that. But I don't see anything positive, especially when you have the tariffs coming up. The one thing to watch, I think, like we highlighted before, is to watch for news of Phillip's IQOS Illuma. I hope I pronounce it right. The heated cigarette being launched in the US. There's speculation it get launched in the second half. So if that happens, then my guess is that it will benefit them. Yeah. So the target price is 10.40. Yeah. We have a neutral call on neutral because we are not expecting any strong results. But the yield is attractive. Yeah, but that's why we are kind of. Yeah, I think mine is the lowest target price as usual for venture. Yeah. Hi, Paul. In one of your slides, one of the reasons for being bullish on REITs is that you don't foresee rate cuts because of tariffs. But I record previously foresee 2 rate cuts. Yeah, we still expect it, but we think it's going to be very back-ended. Yeah, that's my own view because I think the jobs is going to come down, and even if you don't, like we highlighted before, I think the market's going to price that in because eventually power is going to get replaced in May, right? Like we highlighted. So we think even if it doesn't, the markets might try to the Fed funds rate may not come down, but at least the bond yields might start to react because they know there's going to be rate cuts from coming out. But I still think there's 2 rate cuts coming. I mean, that's my own view. Probably the only one. I think even though once inflation bumps, the Fed might just say that, oh, this is only temporary because this is just the tariff effect. After that, but the economy is weakening and then I need to cut rates. So they're just looking for an excuse. Yeah. Again, this is my own view. These things. Yeah. Yeah. So this is just how I still feel. But my point was that even before the Fed cut rates, Singapore interest rates have really kind of collapsed. Yeah. In view of the current volatile market, what is your view on US Treasury long term? Is it still okay to accumulate? I still think so because again, my own thoughts is that you will get a cut within the next 12 months because of the Federal Reserve will be politicized once Donald Trump puts in the new Fed governor, and the Fed governor will cut rates. And like we highlighted again, this is our theory. This is our thesis that the market will know whoever comes in, but the market won't wait until May. I mean, the market will start to the bonds might rally even before that. That's my own view. Yeah, because I mean, it's going to happen, so it's just a timing of when. What's the target price? Yeah, we don't have a target price for Singapore, so we never really covered it fundamentally. But just that I've gone to many meetings and followed them for many years. If not 5 years, at least 6 years. I think. Yeah. Continuously attended all their briefings. So I think I'll leave that target price to Zane. Yeah. There's a Frencken. I'll leave it to any view on StarHub performance. We are not positive on StarHub. We also have a neutral call on StarHub. Because we think the competition is still very aggressive until we get a consolidation between I guess M1 and StarHub. I think it will still be a very weak performance coming up from StarHub. Because always remember, when the selling price comes down, right, it will directly impact the bottom line. So no matter how much cost cutting you do, right, it will just go straight to the bottom line because when the prices come down. So once prices for mobile come down, it's always a big red flag because it might come down 5%, but the impact on earnings could be 10. I'm just making this example, it could be 10%, 15%. So when prices come down for mobile, having doing this for so long, right? You always start, it's a big red flag. So prices come down, you usually have a big impact on earnings, much more than the headline price effect. So that's something that we worry of. What's your view on Comfort? Yeah, we are still positive on Comfort as usual after so many years. Although the share price never react. But we think the UK will still be, the earnings will still drive the whole group. But of course, there's a lot of headline news that worry investors because Grab is coming up, but the taxi fleet is nothing compared to because Comfort I think is like 9,000 if I'm not mistaken, 9 or 11,000. Just slipped my mind, but nothing compared. So Grab's taxi fee will make a dent to Comfort. Yeah. We still positive because I think UK will be the big driver to the earnings. So we still think first half earnings will be strong. And because they made those acquisitions, yeah. The reason why we took it out from our model portfolio after so many years is that is mainly the quality of the earnings, because if the earnings start to come from acquisition, then of course, although these may be good acquisitions, then we usually prefer organic growth. But once it comes to acquisition, we kind of take a step back a bit. Yeah, I hope that makes sense to you. Yeah. I mean, again, these are all our views. Yeah. Okay. I will hand it over to Miao, Yigban, and Darren. Yeah, thanks everyone for your questions. I hope
Yeah, I'll take 17 Life. What's the latest target price for 17 Life? Any news going forward? So the latest target price is 0.84 Singapore dollar, and ever since they changed the exclusive contract to non-exclusive, meaning their streamers can streaming at multiple platforms. They believe MAU has already bottomed up. Yeah, so change from the declining trend to more or less like stabilized going forward. And also like after they launch the user-friendly functions such as the AI chat box, yeah, they feel like MAU would actually see an improvement from FY25 onwards. Yeah, hope it answers your question. I'll hand over to the rest of my colleagues. Thank you.
Yeah, I can answer the one question on Frencken. Regarding since Frencken have investment in Malaysia, will the tariff issue affect their earnings a lot? Yeah, I personally don't think it will, because and as mentioned earlier, the direct impact from US, the direct exposure to US is about 9% of their FY24 revenue. And even though Frencken have investment in Malaysia, their comparable peers also have investments in Malaysia as well. For example, UMS is also building a plant in Penang for their customer. Yeah, so I think relatively Frencken has a lower impact compared to its peers in terms of the tariff impacts. Yeah, hope that gives some insights. Thanks.
as we wait for Darren, let me just try to answer this Semcon industry before I need to rush off for a meeting. Sorry, everyone. Any news about Semcon industry strategic review exercise? What can this SR? Yeah, don't hold your breath. Sorry, don't wait for this. I think this strategic review, I think, was taken out of context. They always do a strategic review. There is no big assets to monetize for Semcon Industries. This is unlike this is unlike like Keppel and even Singtel. So don't expect anything to come up from that. I think for Semcon Industries, what I'm watching for is more increase in the dividend payout ratio from 40% to 50. 40% is ridiculously low. So 40 to 50. So that is something that I'm looking for. I don't expect anything from strategic review. I mean, they will usually do that. Then I think probably my own view is probably Bloomberg took it out of context. Yeah. I hope that was useful. Yeah. Thanks, CK. Yeah. Okay. Thanks, everyone. Yeah.
Okay, thanks, Paul. I will start covering the TA questions. Yeah, so let me just share my screen for that. The first question is on China's sunshine. Yeah, I think for this one, I think last week continue to see the uptrend continue on. So there was a breakout of this resistance after it did a range consolidation. So the resistance at 57 cents was there was a breakout of that. So I would think in terms of projection, if you take the range around 52.5 cents to 57 cents, that's about 4.5 cents projection around 61.5 cents, which he hit on last Friday. Yeah, but I think over here it's still very strong, just quite low volume after this the initial spike. So we might see some consolidation waiting for the moving averages to catch up. I would think maybe now maybe around 60s, close to 60 cents might be the support. Yeah, I think uptrend is still going well. Yeah, for this another resistance I would think maybe it will be a retest of this trend line over here. So that will be much higher, maybe closer to 65 cents could be a resistance next, in my opinion. Okay, and next one is on Singtel. Yeah, I think Singtel is the chart is quite nice as well. So a very steady uptrend previously until April. Then there was a breakout of this channel price consolidated sideways. We continue to see higher lows along the way, and the resistance was at around $4. That was last week. There was a breakout of that. So I think I had a technical buy call on that also. I would think that it's quite likely that I think we will see the uptrend continue on towards to hit perhaps around 424 first, which is the projected target level based on the range. Yeah, so for now this 5 MA level will likely be some support over here, which is around the $4 mark around it. Yeah, so I think still looking very positive for Singtel in terms of the chart. Next one for Keppel, I think Keppel is also looking quite good. It's just a very steady uptrend over here. So price is the strong support right now for Keppel, I think is this red line, the 10 MA level. Recently price also break out this resistance around $7.70. So I think that will be the support for now. So I would think the uptrend would likely continue on. Next resistance level, I would think maybe around somewhere close to $8 could be the next resistance. Yeah. Okay, next one is on Seatrium. Yeah, for Seatrium, I think it could be starting to look better. So it has been range consolidating in the range of about $2 to about $2.12 since middle of May. But I think recently over here today we tested the resistance again over here around 214. So I think if could break out this level, I think we could see some potential upside. There's some resistance over here still at 216, but I think following this range over here we could take break past it. So I think the next key resistance could be somewhere closer to about maybe 224, 225 next. So I think there's some potential for the price to hit high if you can break out this resistance for Seatrium. And then for Frencken is also looking well. Yeah, so for Frencken, I think there's a very steady uptrend. Did like a range consolidation 2 times over here last week. Break about this 129. So it's currently 136. I would think the next resistance maybe somewhere close to 140 over here. Yeah, for Frencken. The next one could be somewhere around close to about 149, 150 next. So overall, for now, in terms of the price action, still just trending up quite well over here. Next one is the CLR, which is the Lion Phillip S-REIT ETF. So for this, I think likely still quite positive. There was a bit of resistance still around it. This goes to 81.4 cents. Price did a pullback over here, but I think we see that this resistance around 79 cents previously looks like it's holding as support. So I think overall still very positive kind of price action where previous resistance still holding as support. I would expect price to recover back to retest this resistance over here again, close to 81 to 82 cents area. Then if you can break above that, then we could see finally a breakout of this range has been trading in since November of last year. Next one is on Bumi Tama Agri. So for Bumi Tama, I think price has been mostly in a bit of a descending triangle over here. But positives are that some higher lows along the way, and main resistance is coming from this downward resistance line close to 79 cents. So I think if price can break out this level, it'd be quite positive to try and retest this 80.5 cents level and also the next resistance around 83 cents. Yeah, so for now, maybe some consolidation first. I think support could likely be around this 77 cents mark, which there was a bit of horizontal resistance over here at 76.5 cents, and price broke above that on Thursday last week. So maybe perhaps a bit of consolidation. If price can break above 79 cents, we could see some upside ahead. The next one is on sets. I think sets looks like a bit of range consolidation for now, but I think the price action wise is looking better. When price there was a bit of weakness over here around end of June when it broke below this $3.03 level, but subsequently it did a recovery above that, and also its price is trading above the moving averages for now since last Wednesday. So with a break above this $3.09 level as well. So I think now the resistance $3.15. If you can break above that, I think we could see price go up further. Yeah, towards the next resistance close to about somewhere close to 330, that will be the next major resistance. So I think it's a bit of range consolidation right now, but I would think more towards upside bias given the recovery above $3.03 and price is trading above the moving averages right now. Next one is Samudra Shipping. Samudra Shipping, I think the chart also looks quite positive. There was a break above this 85 cents as well as 88 cents resistance, and also just trending along the moving averages for our 5 and 10 MA. Yeah, so I would think price it could be near a bit of a resistance over here. 93 cents could be a resistance. Next one is around 96.5 to 97 cents area. Yeah, so for now, I think we could still see the momentum just gradually trend upwards towards these two levels for Samudra after the break of these horizontal resistances previously. Okay, then next one is on WeHer. So I think WeHer is still trending quite well since the breakout of this ascending triangle. There was a strong resistance at 47 cents, but price finally there was a breakout of it, and we're seeing very strong momentum right now. So it hit my first take profit level already at 54.5 cents, but yeah, just momentum is still very strong. So I would expect price to just trend along the 5-day MA for now, around 52 cents could be a support right now. Yeah, then I think the second take profit level could be around 61 cents. This is the projected target level if you take the height of the ascending triangle projector onto the breakout level. Yeah, so I think it's still on track to hit this level for WeHer, still very strong right now. Okay, next one is on Capital and Escort Trust. I think for this I think it's looking better. So there's a bit of a recovery in terms of the price over here since 86 cents, or recovery above this support breakdown resistance level. Then after subsequently held as support. price continue form higher highs and higher lows at this stretch, now holding above 88 cents. So I think if over here you can hold it 88 cents as a support, which is also currently where the moving average supports are, we could see continue upwards movement for the price to form a higher high towards maybe 90 cents, 90.5 cents again. Yeah, just it will be more gradual from the. It looks like it will just be a gradual movement upwards, most likely. Yeah, and next one is on Fortinet and Walmart. So for Fortinet, I think price looks like it's still not so good on Thursday. There was a price above this 106 level, but also some resistance over here close to 108, 109. Typically, there was a pullback. So with that, I think price we could see most likely is still in a bit of a range over here. So if we can't hold this 98 level, we could see price come back down towards the next support could be somewhere 93 to 95 again. Yeah, just quite a range bound kind of counter for Fortinet. And for Walmart, yeah. Yeah, for Walmart, I think currently it's still looks like it's ascending triangle over here, but I haven't can't break the resistance around 99 to 100 this level. There's been some higher lows formed along the way, but the momentum looks like it could be coming down a bit. So if it confirms the break below this 94 level, we could see some further pullback towards around $90.50 to 92 this area again. Yeah, for Walmart. Then a strong support level I think could be from this longer term trend line over here. Yeah, every time if price does test this level, I think it has held as quite a good support in April this year as well. Yeah, so that will be somewhere close to $90. Yeah, so I think for Walmart, if it breaks below 94, we could see some further price in the near term. Okay, then moving on to some of the questions on the REITs. First one starting with land lease. Okay, first one for land lease, I think still looks like a bit of a consolidation right now. There's some resistance coming from 53 cents to 54.5 cents area. So this will likely still hold as a bit of resistance. I think the chart looks kind of range bound. 47.5 cents a support, then resistance at 53 cents to 50. So I think we'll be just quite sideways. For accessory, I think looking better in terms of chart. So there was a range consolidation, 62 cents to around 64.5 cents. Recently price broke above it, still holding above that for a few days. So I think it could look for better for price to continue to inch higher towards the next resistance. I think that will be somewhere around 66 cents to 67.5 cents will be the next key resistance. So will be just could be just slow and steady to inch higher. If as long as 64.5 cents can hold. Okay, next one is on ESR REITs. For ESR REIT, I think for now it looks like could be in a bit of a range consolidation where price it was trending upwards over here this period. And then start of July over here there was a break below the 10 MA. Also the breakdown below this 245 this breakout level. So I think price could be entering a bit of a consolidation right now. Some supports close to 240 this area, then just moving I think a bit sideways. So could be just trading sideways with some resistance above 245, 246 right now first. This is on Capital Infra Trust. Capital Infra Trust, I would expect just range movement. So I would expect resistance for at 42 cents to 43 cents area. This because price has been still trending downwards with lower highs and lower lows since February of last year. Yep, so I would expect 42 to 43 cents to be still holding as resistance, and support for now be around 40.5 cents to 41 cents area. So just quite sideways movement, I guess. Okay, then there's the question on Del Monte. Yeah, in terms of the chart, it's actually quite erratic. So in terms of because there was quite low volume previously. So but for now, it looks like a bit price has turned a bit sideways. The volume has come down since the volume started coming in start of this month. So it looks to be a bit more sideways right now. It looks like a range consolidation between 0.067 to 0.075 sideways right now. Yeah. Then above that, next resistance may be somewhere around 0.080. Yeah, next one for Pay United, I think the trend is still very strong. Especially recently was a price just continue to see quite heavy volume as well and break above 90 cents to hit about $1.02 today. So I think still very strong momentum. Right now, support could be likely around 95 to 96 cents area for now if the 5 MA catches up. So I think for now, still a very strong uptrend, and we could see price continue to hit for higher highs. Yeah, as long as it doesn't break below the 10 MA level, then should be okay. For ST Engineering, I think still is okay. Overall, it's an uptrend. Recently price broke out of this range consolidation resistance at $8. So we just could be doing a bit of a retest right now on lower volume. So I think that's still fine. Support could be this 10 MA level. Yeah, close to $8 as well. So I think we'll likely find support over here for now, for over there, and we could do a rebound upwards. Yeah, to the current resistance of about 840. So I think the uptrend is still intact for ST Engineering. Next question, what's the possibility of Ethereum upside within the next 6 to 12 months? Okay, let me look at the chart. Okay, for Ethereum, I think recently there was a breakout about this 2007, 2800, this resistance area over here after this range consolidation. So in terms of the height, it's about maybe let's say $500. Near-term upside projection target close to 3,200. So 3,200 was a previous strong support over here, likely to be a resistance. In the next 6 to 12 months, I would think it could still have some upside, but I would think it probably wouldn't exceed this 4,100, previous all-time high. Yeah, because quite a lot of resistance over here, and generally has been just range. It's not like Bitcoin where you see a longer term uptrend. So I think for the next 6 to 12 months, probably it could hit higher from this position, from the current levels, but maybe I would think could be around 3,500 to 4,100, this area. Yeah, it will be likely quite slow, given there was a previous support breakdowns that hasn't been recoverable. Next one is on SMCI. Yeah, for SMCI, I think it looks a bit slower. It looks like could be forming another range over here right now. So, but the good thing is that still remaining above this breakout level around $44, and this 47 around here, this swing high previously looks like it's turning into a bit of support. So it looks like a bit of range consolidation over here. If it breaks above 51, then maybe we could see price try to hit to the next resistance around $55. Yeah. So for SMCI, it looks a bit trying to trend upwards, but a bit range bound in between. And for ST Engineering, looks like a bit of consolidation taking place after this strong rally. So I think looks like possible bull flag over here. It will be good if price can remain above 317 uh this range breakout level over here. Then I think that could mean it could retest this 328 again. Yeah, then that will be a sign of quite bullish trend. So for now, just the counter is probably just resting for now first in this range consolidation. The next one is on Frasers Centerpoint Trust. I think this looks a bit range bound for now. So I think support a strong good support will be somewhere around 215 this level where there's you can see swing lows over here, and there could be this trend line support over here as well. The resistance around 228 for now. So it looks just is a bit sideways since end of April, just moving range bound. So I think that will continue for now. The next question is on Capital DC REIT. Yeah, so for Capital DC REIT, I think seeing a bit of a weakness in terms of the price right now, because previously it was still holding in this range at around 226, but there was a break below that last week, below this trend line as well. So I think currently it's back to this lower support level around 218 to 19. So over here I think we'll do a rebound, but we could see some resistance somewhere around close to 225 this recent breakdown. Yeah, it could consolidate in the lower range. Yeah. Miao Shipbuilding, I think would be still moving a bit sideways, but looking a bit better. So it still looks like there's a lot of resistance from about 230 to 238, this area where price broke down at end of February. This has been holding as resistance. But in terms of the recent price action, if we're looking a bit better, when there was a break out above this short-term downwards resistance line. So I would be looking whether this 227 can hold as a bit of support over here. If you can price can hold above this trend line, then I think it could be more upside bias if you can break out above 238 next time. Yeah. So it looks like a bit of it could be doing a bit of a range consolidation here first. And for Zixing, for Zixing, I think today we tested this resistance 0.032, 0.033. Over here, I think it could be price could pull back again from this previous support term resistance level, because price was consolidating over here for quite some time, and this 0.0232, 0.033 was some support. We see them as a breakdown, so should be quite a lot of some resistance over here acting on it. Then I think price could do a pullback from these levels back to the 0.029, 0.030, this level again to do some range consolidation. And for CNMC, I think looks range bound for now. So around 42 cents to 44.5 cents first for now first. Yeah. We'll just be still moving sideways. And there's a question on the target price for Singpost. Singpost, I think this one has been quite range bound, but some positive signs I would think has been testing a resistance at 63 cents a few times. Then we can see it held the support previously at 50 cents over here, then higher lows was being formed, and currently it could be doing a build up at resistance. So that's a positive sign I feel. So if next time I think it can break out above this 63.5 cents, I think that will be quite positive for price to trend higher. Yeah, then in terms of target price, in terms of technicals, the next resistance I think will be maybe 66 cents, then around 67 cents over here. Yeah, for SingPost in the near term. If there's a breakup of this. And then the question for T for UMS. Yeah, for UMS, I think quite similar to Frencken also. So we can see there's some range being formed and price breaking above it. So it's an uptrend over here. I would expect price to try to break above this resistance, 136, after this consolidation. So I would expect higher highs ahead for UMS. The next resistance could be around 140, as well as the swing high 147 over here. Yep, still still on a steady uptrend for UMS. We should see higher highs ahead. Then for venture, I think it's starting to look better. So price was consolidating at this $11.80, this previous range breakdown level. Higher highs and higher lows was formed, and I think we could see price try to test 12.20, as well as next resistance 12.50 next. Yeah, so some recovery for now. Yeah, I'll try to go through a few more before it's about one. So next one, BRC Asia. BRC Asia, I think still a very steady uptrend. Generally, you can see it's trading within this blue color uptrend channel in the longer term. Recently, there's a breakout after this very long prolonged consolidation, 3.10 to 3.17. So for now, it hit this channel, so we could see some sideways consolidation for now. I think support could be somewhere around 325, 330 for the 5 MA level. If it goes below that 325, then could be consolidating for the current price to maybe 340. So still very strong uptrend. Then for next one, oil tech. Yeah, oil tech I think is looking still very good. Broke out this consolidation wedge. And whenever you see volume spikes, it's company with price rises. So that's still a very strong sign of bullish action. Today continue. Since the break, I think there was a break above this 61 cents. There was a bit of resistance above that, but I think price could rise quite easily from now on. Not much resistance until could hit back 70.5, 71 cents. It's also the take profit level for technical buy call as well. So I think still looking good for our tech. Yeah, I'll cover two more, which is DigiCore REIT. So for DigiCore REIT, I think for now looks like still nothing much I would expect. I would expect just range consolidation to continue on. This 44.5 cents could still remain as resistance, and support right now is 52 cents. Yeah. We're just moving sideways. And last one is HST, which is the Lion OCBC Hang Seng Tech. So Hang Seng Tech, I think just moving sideways still. Yeah, still waiting for see whether there's a break of either side. So this one just maintaining at around 81 cents to about 88 cents range. Nothing going on for now first. Yeah, so I see there's still a lot of questions for us in the Q&A. Sorry, we are unable to answer all of them in view of the time constraint because we try to end the webinar at 1. But you can feel free to post them in our Poems Tree community groups, and you can take it over there. Yeah. So I'll just stop sharing my screen right now. Thanks everyone. On behalf of Paul and my team, I'll just like to thank everyone for attending today's our webinar, and also for all your questions. So if you missed the recording or you joined in a bit later, feel free to view our recording over at our YouTube at PhillipCapital. With a recording of our today's session will be uploaded shortly after. Yeah, and also feel free to join our Corporate Insights webinars The next one I think will be next week on Money Hero. Yeah, so that's the next upcoming one. Yeah. So thanks all of you again, and we look forward to having you in our next webinar. Yeah. Have a good week ahead. Bye bye.